All right, so how many saw the president's speech last night? I guess that was the official kickoff of the Trump re-election campaign, masquerading as his missed State of the Union address. But during about, a 90-minute speech, the president basically claimed victory for having completely transformed America. The years and years or decades of economic decay are now behind us, and we are now experiencing an economic boom unlike the likes of which the world has never seen before, except they have seen it before, just before he was elected, during Obama's second term. There's basically no substantive difference. Oh, you guys have short memories. In fact, the main difference between Trump's first term and Obama's second term is that the trade deficits and the budget deficits are larger now than they were then. In fact, if you remember, the reason that candidate Donald Trump said that the American economy had been decaying was because we had large trade deficits. And these large trade deficits had hollowed out American industry. America's manufacturing base had been hollowed out, and we had replaced it with a service sector economy that was basically being sustained by debt. And he was correct. Except the problem is the trade deficits are bigger now than before he was elected. So if America's economy was in decay because of trade deficits, which are now larger than they've ever been, how are the years of decay over? GDP growth last year was 2.3%. How is that any different than the 2.3% we got under Barack Obama? Again, the only difference is we had to borrow even more money to achieve the same level of fake GDP growth that we did under Obama. The reality is nobody should be taking credit for the current U.S. economy. The question is, who deserves the blame? Why has the morbid growth of the Obama era continued under Donald Trump? The blame for the U.S. bubble economy, which is what it is, belongs to the Federal Reserve. The Federal Reserve is pursuing the same monetary policy that got Donald Trump elected. See, Donald Trump was elected because as a candidate, he told the truth about the U.S. economy. He described it as a bubble. He said it didn't matter that the stock market was going up because it was only going up because of the Fed. Because the Fed was keeping interest rates artificially low. It was doing quantitative easing. According to Donald Trump, the Fed was doing these political things just to make Obama look good. But that in the long run, the paper wealth of a stock market meant nothing because eventually the bubble was going to pop and the stock market would come tumbling down. See, Donald Trump promised to change all that. See, he promised to make America great again by draining the swamp and eliminating the national debt. He was going to get rid of it. Instead, during his 90-minute campaign speech, he never once mentioned the national debt. In fact, he never once challenged Congress to cut one dime of government spending, which means Donald Trump is happy with all of the new welfare spending and all of the new warfare spending that is taking place under his administration. I mean, who needs to elect a socialist? We got Trump, right? He wants big government, and he's happy for the Federal Reserve to print all the money necessary to pay for it. In fact, again, when Trump was a candidate, he was critical of the Fed. The reason that he supposedly didn't renominate Janet Yellen was because she was too easy. She was doing QE. She was keeping interest rates artificially low. So we get Jerome Powell. And what is Trump's criticism? Rates are too high. They're 1.5%. He was beating up the Fed because they weren't printing money fast enough. Now, you know, when I was here at the Money Show a year ago, January, right, the Fed had raised rates in December. And I was the only guy back then who said that the Fed was done raising rates, that the very next thing that they would do would be to cut rates. In fact, I was just in Vancouver about a week or two ago, and I collected on a bet where a guy on the panel bet me that the Fed would raise rates, and I said no, they would cut rates. Well, they didn't just cut them once, they cut them 3 times. And the reason that I knew that the Fed was going to do that was because the air had already started coming out of the bubble in the fourth quarter of 2018. We would already be in a severe recession but for the Fed's 180-degree turn on monetary policy. But not only did the Fed start cutting rates, but they also fulfilled another one of my forecasts, which was that they would return to quantitative easing. And that's exactly what they did, except they don't want to admit that it's quantitative easing. No, because they do quantitative easing when the economy is in trouble. And the Federal Reserve wants to pretend that the economy is doing fine. So it's not calling quantitative easing, but that's exactly what it is. The only difference between the unofficial quantitative easing they're doing now and the official quantitative easing they were doing in the past is that now they're doing it even bigger. If you look at the rate with which the Fed's balance sheet is expanding, it's expanding faster now when they're not doing quantitative easing than it was when they were. So yeah, maybe this isn't QE, it's QE plus. But of course, quantitative easing was never really quantitative easing. That's just a euphemism. What is quantitative easing? That's when a central bank creates money out of thin air, inflation, and uses the money to buy government debt, to monetize government debt. That's what the Fed was doing before Trump was elected, and that's what the Fed is doing now since Trump's been elected, because the debt bubble is much bigger today than it was then. And the reason the Federal Reserve had to reverse course is because normalizing interest rates when you have an abnormally large amount of debt is impossible. And that's what I was saying for years. In fact, before the Fed even tried to raise interest rates, because they were, talking about the normalization process for years, but before they even embarked on the journey, I said it was impossible to finish, that there was no way the Fed was ever going to be able to deliver on its promise to normalize rates. And I was right. They got to about 2.5%, and everything fell apart. The auto market, the housing market, the stock market, and then the Fed had to reverse course. But it wasn't just on rates. The Fed was doing quantitative tightening. It was trying to shrink its balance sheet. It had to abort that effort, and now the balance sheet is back above $4 trillion, and it's headed much, much higher. And, the reason that QE and 0% interest rates did not result in a dollar crisis when the Fed did it the first time. The reason that the price of gold stopped going up when it hit 1,900 and pulled back to 1,000 was because the Fed was able to fool everybody into believing that they actually had an exit strategy, that this monetary policy was just temporary, that they were actually going to, basically get everybody to take on all kinds of debt by bringing interest rates to zero and monetizing all this debt. And then they were just going to pull the rug out from under everything, and everything was going to be fine. But what I was saying is that's impossible. If you get everybody loaded up with debt, the only way to sustain it is to keep those interest rates at zero, and that's exactly what's happening. The Fed is now proving me right by cutting interest rates long before they ever got to anywhere near normal, and by going back to quantitative easing. But it was the belief, the false belief, that these policies were temporary, right? That is what caused gold to fall. That is what kept the dollar afloat. Soon, people are going to realize that that is not the case, that interest rates have to stay near zero or even negative forever, and that the Fed's balance sheet is going to grow in perpetuity. Except that can't happen, because then the dollar will collapse and inflation will take off, not just in financial assets. Everybody is happy when inflationary monetary policy makes the stock market go up, which is the only reason the stock market is going up. Earnings aren't rising, it's just stock prices that are rising, and that's because of the inflation that's being created. But eventually, all that inflation moves from the stock market to the supermarket, and that's when it becomes a big problem. But a bigger problem that's now brewing is the political time bomb that is ticking, because I pointed out that the real important fact of the 2016 campaign was not that Trump won. That was something that I thought was not, impossible to happen. I mean, I didn't know he was going to win for sure, but I thought he had a much better chance of winning than was generally perceived. But what I looked at as the real movement was the popularity of Bernie Sanders on the left. And the reason that Trump appealed to a lot of Democrats was, again, he told the truth about the U.S. economy. He pointed out that the government numbers were a fraud, that the unemployment rate wasn't really as low as the official numbers let on. Donald Trump said the real unemployment rate is 30% or 40%, right? And he accurately described the bubble and that the economy wasn't doing nearly as well as the administration claimed or as Wall Street claimed. And so those comments struck a chord. Trump is now in the opposite position. He's not talking about draining the swamp. He's now the swamp. Right? He's now trying to sell the same BS economic data that Hillary Clinton was trying to sell on behalf of Barack Obama. He wants a lot of people to think that the economy is booming when they know that it's not. I mean, I think there is some optimism. I think there's some hope out there that things are going to get better, even though the indications are that they're not. Why are the budget deficits as large as they are? If we really had a booming economy, the deficits would be shrinking, not growing. Trump talks about manufacturing. Well, as a share of employment, manufacturing represents a smaller share of the U.S. economy now than it did before he was elected. He's bragging about the fact that 70% of the jobs that have been created since he was elected, were filled by women. Well, one of the reasons that women are getting so many jobs is the manufacturing jobs aren't there. And a lot of the women who are working are married and have kids, and they'd rather not work. A lot of them are working because they have no choice, because the economy isn't nearly as strong as the president claims. And I think because Donald Trump failed to deliver on his promise, that now I think the voters are likely to buy another false promise, and that's one of socialism. When the Federal Reserve's bubble popped on George Bush's watch, we got Barack Obama, right? Because everybody blamed capitalism. They thought that the financial crisis of 2008 was a consequence of not enough government, not enough regulation, of unbridled capitalism, even though the entire crisis was caused by the Federal Reserve pursuing the exact same monetary policy they're pursuing now. The only difference is they're more reckless now than they were then. The monetary policy after the 2008 financial crisis has been far more reckless than the policy that preceded and caused the crisis. But if capitalism got a black eye from the 2008 financial crisis, this crisis could deliver the knockout blow. And whether this new recession officially begins before the next election or after, it's going to be blamed on Trump and what Trump stands for. Not necessarily what he practices, but what he preaches, which is less government, capitalism, free markets, deregulations, tax cuts. That's what this next crisis is going to be blamed on. And it doesn't matter, again, whether it happens before the 2020 election or after, because the president who follows Donald Trump, whether he follows him or she follows him in 2021 or 2025, is going to be a socialist, because this next recession is going to be far worse than the Great Recession of 2008. And unlike that recession, there is no way the Fed is going to bail anybody out, because this is not just going to be about subprime mortgages or private mortgages. This is going to be a sovereign debt crisis. This is going to be a currency crisis. See, the Fed was able to bail out the economy or all the bad debt by buying it and substituting Treasury debt for mortgage debt when people wanted it and when people wanted dollars. But when nobody wants treasuries and nobody wants dollars because people finally understand what's going on, and if we had record budget deficits under Donald Trump, if the national debt was increasing by 1.2, 1.4 trillion per year under a Republican president in supposedly good times, imagine what's going to happen to the budget deficits in a recession with a Democratic socialist president and a sympathetic Congress. What happens when we have $3-4 trillion a year budget deficits? What happens when the Fed has to monetize that? Right? Gold went to 1,900 an ounce when people were worried about what might happen. Well, they're going to find out because it's going to happen even worse, and the price of gold is going to go much, much higher. So people have to adjust their portfolios now. You know, back in 1999, 2000, people were very excited about the stock market. Back in 2008, they were very excited about the stock market, and then the market got cut in half. And more overvalued indexes like the NASDAQ was down 80% in 2000. We have a much bigger bubble now than we had then. The difference is, if you get this wrong, the Fed is not going to bail you out. There is no bigger bubble that the Fed has up its sleeve. Because when it tries to revive the economy, when it tries to revive the markets by printing more money, the amount of money it's going to have to print is going to be a lethal overdose of inflation.